Welcome back to Live from Paris here on France 24. It's time now for us to take a look at all the latest business news as we start this new week. And for that, I'm joined here in the studio by our business editor, Owen Fairclough.
Hi, Catherine.
Hi there. We're going to start off by taking a look at the current trading that's underway.
Yeah, fresh week, same old blues it seems, Catherine. Certainly on the European markets, all very flat. The Spanish IBEX as well is leading that flatness, if you can lead flatness. Its borrowing costs up to nearly 7% after shooting up last week. Those are the numbers for you. You can see the FTSE just managing to show a few green shoots, as they say, on the Asian markets as well. A pretty depressed start to the week's trading there, with the Hang Seng down by nearly 2% at the end of play there, and the Nikkei not far behind. That was after some fairly flat data on jobs at the tail end of last week in the US.
Yeah, still having an impact this week as well, it would seem. Moving on to questions here in Europe, the French trying to get a bit more German in their way of doing things. That sounds interesting, challenging. Tell us more.
It certainly is. And 50 years of reconciliation. We had that anniversary over the weekend with President François Hollande and Angela Merkel showing the unity and proving that there's no doubt about these two countries' commitment to peace. But their economies are fast diverging and moving apart. In France, labour costs are simply too high for a country struggling to bring down its deficit, and a country that is now bordering on recession. Low growth means finding financial means to incentivise employers to become just that little bit leaner. And that's the dilemma facing both the government and trade unions as they head into a two-day social summit. Catherine Gillam has the details.
As Germany powers ahead, France is feeling blue. Its share of European exports has fallen from 15.7% to just under 13% in a decade. The new French president has vowed to make the country's economy more competitive, yet he's just put up the minimum wage by 2% to €9.40 an hour. It's making it harder for France's companies to compete with their German counterparts who have no minimum wage requirements. They also pay less social charges for each of their employees in Germany. Average labour costs in France are €34.2 per hour compared to €30.1 in Germany, both above the EU average of €23.1. Some are suggesting that social charges should be shifted onto other taxes, but the French government disagrees.
We refuse the idea that an increase in VAT is a solution to the problem. It's neither economically nor socially. We think it would be detrimental to consumption and would be unfair on the spending power of those who would be affected.
The Hollande government needs to do something to keep its election promises of boosting growth and creating employment. And they could do worse than following Germany's example, where the unemployment rate is almost half that of France's.
So nothing like a challenge there, Catherine, just to make things that little bit more challenging. The Bank of France has confirmed its estimate for the second quarter in France for GDP. That's 0.1%, so negative. That's on top of 0% growth for the first quarter. Now, technically, we can't call that a recession. Of course, a recession has to be 2 consecutive periods of negative growth, but it's sure going to look and feel like a recession with such flat numbers. Remember, the French government keeps whittling it down. Its growth prospects for the entire year only around 0.5% now, or just above.
Yeah, maybe it doesn't matter which label you put on it. It's still the same lack of growth, isn't it? Well, another meeting that's not expected to make huge progress is the latest get-together of Eurozone finance ministers. Spain remains the most urgent piece of business. Just before the weekend, its long-term borrowing costs briefly broke 7%. Now, that's the rate that triggered bailouts in Greece, Ireland and Portugal. Maeve McMahon is following this story for us from Brussels and joins us now. Maeve, what can this meeting do to actually help Spain?
Well, finance ministers can just pave the way, really, to unlocking the keys to the up to €100 billion EU IMF aid that Spain has requested to beef up its banks. As you're right there, borrowing rates have gone up to a rate that shows that the country has lost the faith, really, of the markets. The initial euphoria from the last European summit seems to have faded, and some economists said this weekend that the situation looks even bleaker now for the Eurozone than it did before the last European summit. So today's Eurogroup will just be a working meeting, really, between finance ministers. They'll take a political decision on how Spain's banking recapitalisation programme will work. They'll examine a report from Spain's finance minister and the Troika and provide more details, really, on the strings attached to this aid. Now, they might not sign off on it under another Eurogroup meeting on July the 20th, but they should lay the conditions that will come with it. Among other things, they could ask Spain to create a bad bank to hold non-performing assets, and they could ask financial institutions receiving aid to reach a number of criteria too, like presenting restructuring plans that would have to include asset sales, office closures and restrictions on bankers' bonuses. Now, just at the end of last month in Brussels, EU leaders promised to break that vicious circle between banks and sovereigns. So investors will be banking on this meeting this evening in Brussels to provide more signals on how they really plan to do this.
Thanks very much. Maeve McMahon reporting there for us from Brussels on that Eurogroup meeting. OK, so Owen, give us the latest now on the other headlines.
Yes, indeed. A few more company headlines for you. Now, Norway is bracing itself for a total shutdown of its oil industry. A 2-week strike involving 700 staff is expected to see all 6,000 workers walk out on Tuesday. The government in Western Europe's top crude producer has been unable to resolve a dispute over a demand to retire at 62 instead of 65. The strike has so far cost the industry an estimated €385 million.
The EU is planning to draw up new legislation aimed at preventing a repeat of the Barclays LIBOR scandal. Financial regulators in Brussels say the rigging of interbank lending rates will be criminalised. Barclays chief executive Bob Diamond was forced to resign over it. Later this Monday, the Deputy Governor of the Bank of England will give evidence to Parliament about how much he knew about the affair.
And the UK's Farnborough International Air Show opens with Airbus looking to boost its order book on its first plane made from plastic. The France-based plane maker is building a new version of its A350 Mini Jumbo from a carbon composite that'll be ready for service next year. It's trying to steal market share from Boeing, whose Dreamliner jet is catering for airlines who need to save money on fuel with lighter long-haul aircraft.
Now, for those brave or foolish enough to do it, Pamplona's running of the bulls is one of the most terrifying stunts in the world. It draws tens of thousands of visitors to a city where unemployment is less than 1/3 of Spain's 25% jobless rate. But this year's festival is an anxious time for bar and hotel owners who see tourists tightening their belts.
Providing food and drink for the partygoers in this bar in Pamplona is a round-the-clock job for Maria. This year, more than ever, the 9-day festival of San Fermin provides a vital economic boon for the city. Like elsewhere in Spain, Pamplona has been hit hard by the crisis. Unemployment is up while living costs have also risen. So an influx of thirsty tourists can only be good news.
We really hope that lots of people will come. We have calculated that it represents 1/3 of our turnover. We want to see lots of foreigners, French, Australian and English.
Around 500,000 tourists visit Pamplona over the course of the festival. The main attraction is the bull run, where people risk serious injury running ahead of the bovines through the narrow streets. As a reaction to the economic climate, the city has cut its festival expenditure by nearly 10% to €2.4 million. It's a tightening of the belt that is matched by the visitors, who are nonetheless determined to have a good time.
We bought all our food and stuff before coming. We're ready to spend a bit if we have to, and we can worry about the crisis tomorrow. We want to have a good time and be happy. That's why we came here.
While people may be entering into the party spirit, these are tough times indeed. Hotel reservations are down, and even the Café Iruña, the most famous bar in town where Ernest Hemingway was known to drink, is struggling to match the profits of years gone by.
Well, at least someone's enjoying themselves. Thanks very much, Owen Fairclough, for that business roundup. OK, and that concludes this half hour of news here on Live from Paris. Do stay with us. Stuart Norvell's back after a short break.